I'm about to drop 10 trading life hacks that will drastically shorten your learning curve. These include various tips about trading expectations, psychology, and trading strategy. And lastly, a secret bonus tip to overcome emotions in trading. So make sure you're watching until the end. Coming in number 1, most important thing is to have realistic expectations. When you are trading, it is not a casino. You are not going to be able to make 1000% return in a day. Yeah, you might be able to get lucky over the crypto or one simple CPI trade or something relevant to that. But if you really want to become a professional in this area, you must realize that making these returns consistently is impossible. What you should be doing is thinking about making 2 to 3% a day and doing it on a consistent basis while covering over your losses. The maximum aim should be around 5 to 10% a month. This is something that can be realistically achieved. By having realistic expectations, you can focus on important things such as understanding probabilities. To shift probabilities in your favor, every trader must have a solid risk-to-reward ratios. You shouldn't be executing any trade that's risk-to-reward ratio is less than 1:1. You should always aim to execute trades that give you more than 1:1 risk-to-reward ratio. For example, good risk-to-reward ratio will be 1:2 or 1:3. Or if you want to aim for higher 1:10, you should understand that these sorts of trades would not be sustainable. I'm not saying that you can't aim for high risk to reward ratio trades. I'm saying that you should have an understanding that high risk to reward ratio trades have low probability of winning. Only one trade out of 20 might result in a win compared to risk to reward ratio of 1 to 2, which on average has around 60% win rate. In other words, would you rather take your car to a repair shop that has an 80% probability to fix your car, or to the shop that has only 10% probability to fix your car? Understanding your percentage win rate is crucial in trading. You don't need to win every single trade to be profitable. If you have a 50% win rate with 1 to 2 risk to reward ratio, you only need to win 4 trades out of 10 and you will remain break even or even profitable. Every trader must wire their brain into understanding that what is the probability of winning, losing, or remaining break even. Lower win rate requires higher risk to reward ratio and vice versa. The higher is risk to reward ratio, lower will be your win rate. You should really focus on what best fits your psychology and trading style. To properly understand probabilities, you must have a trading journal. I cannot emphasize enough how important it is to have a trading journal and keep a track of your trading results. Every trader must have a trading journal where they mark down each trade session, every trade that they execute, reasons behind each trade, entry chart, exit chart, after trade chart, and do this for every single trade that you execute. This will let you gather your data and understand what your strengths in trading are, spot your mistakes, and improve your system. A trading journal is a cheat code for continuous growth for both unprofitable and profitable traders. Every trader that doesn't have a trading journal is essentially just gambling. They are not trying to achieve anything, they are not putting in the required work to become profitable. To record your trading data, you can either do it on Notion or Excel, depending what's your favorite. Do not do it on Word document, that is not a proper data collection. Before jumping into trade to live accounts with actual money, you should start with practicing on demo account and having a solid track record registered on your trading journal. Demo accounts allow you to test your trading strategy without taking on any risk of losing money. You can request a demo account from your broker, or another way I personally love to do is to get FTMO demo account. To do that, you just go to FTMO page, sign up if you don't have the account, and then request the demo account, which is totally free, and you will just get your account and you can start trading and testing your edge. By practicing on demo account, you will be able to get the feel of the market movements and the emotions that you are experiencing. Demo account will allow you to understand key issues with your mindset or with your strategy. Start trading on demo account for the first 3 months or 6 months depending on yourself and get the feel of the market. Start learning and recording the trades. Then jump to the live account trading with your real funds or try to pass any funded challenge. And do this only if you have shown the consistent profitability over 3 months or 6 months period on demo account. Trading demo account allows you to practice the discipline of sticking to your strategy, which is the most important aspect of being a trader. Undisciplined trader won't be able to make anywhere in the financial markets because they will be hopping from the strategy to another strategy, not being able to stick to trading rules, always screwing themselves up, and most importantly, blowing their trading accounts. To master discipline, I recommend reading one of the great books, Trading in the Zone, written by Mark Douglas. This is a classic book that dives into the psychology aspects of trading. It emphasizes the importance of discipline and self-control by teaching every trader how to develop the right mindset, manage emotions, and approach trading with a confidence and consistency. In case you are not a fan of reading, you can also look up Mark Douglas interviews on YouTube, which will be down in the description. The second book I recommend will be The Psychology of Trading Tools and Techniques for Minding the Markets by Brett Steenberger. This book covers the psychology behind trading and provides practical techniques for maintaining discipline. It offers tools for help traders understand their own behavior and make necessary improvements. Personally, I had a lot of struggle with impulsive trading, and one trick that helped me a lot to overcome impulsive trading was to change my chart colors into more neutral colors instead of using standard green and red. Personally, I switched my charts to white and black, which helps me to emotionally disconnect my brain from the value of the candle itself, and then I can look at them optimally without emotions. What you can do yourself is change the colors in the settings and apply whatever neutral colors you prefer. You can use blue color, purple, like whatever you like, it just doesn't matter, whatever you feel comfortable with. But remember that only having a chart colors won't let you go far. You must also have a proven working trading system. Some random video strategy is not a tested strategy and is not a proven system. A tested, proven working strategy is the one that you tested yourself at least on 100 trades. You can either use the same strategy as I do, which will be linked in the description below, or you can use a strategy that is based around support and resistance, supply and demand, Wyckoff methodology, Elliott wave theory, Fibonacci retracement, smart money, ICTE. Anything works if you have a collected data on the strategy and it has proven that it has a mechanical edge over the market. But you should also realize that trading strategy won't give you 100 trades in one day. In that case, you will be over trading. In trading, you must understand the concept of less is more. Most of profitable traders that I know are executing up to 8 to 15 trades a month. In trading, you will need to rewire your brain so that the hard work will not pay off. It's all about the smart work. Hard work will only pay off during the times of backtesting and studying, while during the trading time, hard work will destroy your trading account completely. Since you will be looking to trade more, which will lead to overtrading, you will be taking low probability setups and just screwing your account up. Focus on 1 to 2 trades a day maximum. You don't need more than that. Remember, in trading, it's all about quality over quantity. And with this, you must have a clear plan of trading sessions that suits you the most. Hence, every trader should be aware of all the sessions in the market and which sessions they should be trading. And this really depends on what time zone you are on or what pairs you are essentially trading. Total, there are 3 sessions in the market, which are Asian session, London session, and New York session. You can learn more about Forex sessions on Forex Market Hours webpage, link down in the description below. Let me quickly explain why sessions are important. Let's say you are trading British pound and euro against each other. So you are not going to be trading Asian session or New York session because 2 of these countries are located on the European continent. Essentially, the most amount of volume will be during the London session trading. Now, let's say you are trading New Zealand dollar against Australian dollar. You are not going to be trading New York session or London session because the most volume for this pair will be occurring on the Asian session because this is an Asian pair. This is essentially how sessions work, and you should just choose whatever fits you the best and your strategy. And lastly, here's the bonus tip that I promise to overcome emotions in trading. The trick is pretty simple. All you need to do is have a trading strategy and 2 demo accounts. Yep, you heard it right, 2 demo accounts. On first account, you will be simply trading by your rules, and on the second account you will trade same system as on the first account, but you will allow yourself to make emotional mistakes. You will allow FOMO, self-sabotage, greed, and if you want, even you can just full margin the trade over the CPI. I do not care. Do whatever you want. Don't be disciplined on the second account, but follow the rules on the first account. To put it simply, on first account you will stick to trading rules, and on second account you will not stick to any trading rules that you have. You will do whatever the hell you want. And do this for a period of 1 month or 2 months or 3 months. Collect the data for both accounts and then compare them. I can bet you right now that first account, that was only rule-based will always outperform the second account that had no rules at all applied to it. This experiment will let you see and understand fully how our emotions could cloud our judgment and force us to taking unnecessary risks, which essentially leads to burning the account out. This exercise helps you to fully develop the understanding of emotions and overcome the issues in the trading. Hope you find this video helpful, and if you have any questions or concerns that I didn't cover about trading, please leave them down in the comment section below and I'll try to answer them with my best. And remember, subscribe for daily trade breakdowns or your next trade will be a McDonald's job application.